Today, we are bringing our live stream to talk about gold trading step by step, no guessing, just structure. We're bringing you the best traders strategy and structures that you will use to succeed in any gold trading. What's up, folks? What's going on here? Welcome back to the channel. Today we are embarking on breaking a clean gold trade step by step. No guessing, just structure, step by step, from buyers to entry to risk management to trade management. No indicators, no guessing, no gambling, just pure structure. Be patient as we enter this trade. We're not going to gamble in this market. We will take the path, look at the market context. So, how I caught this clean gold buy. All this is being brought to you by Rico Forex Academy. We just launched our new website here where we can do the master the art of gold trading. We have so many courses here. The courses are there. Invest in your trading education. Choose from beginner-friendly courses to elite mentorship program. Every path leads to a profitable trading. We have the Forex fundamentals. Those are the free training for absolute beginners. Just in case you would love to share with your colleagues, guys, share them in the group and let's be able to do the trading. And this should be a great way for you to share with your community and share with people. So for those who are here, please join our trading class now. All right, so we are live. We are joining our trading live. So we have these programs here. We have the fundamentals, Forex fundamentals, technical analysis, but the most popular trading strategy at Rico Forex Academy is the Gold Strategy Pro, which is about $197. We have about 37 lessons. We will give you some of the tips in our free fundamental trainings that is happening right now. For those of you who have just joined, please like, share, and this is the chart that we are going to look at today. So let's move back to what we're going to talk today. How I caught this clean gold buy. We're not going to look at the indicators. We're not going to look at, we're not going to be guessing. We are just going to have step by step how we can do trading. So today we are breaking a clean gold trade. And of course, the market is already closed. If we check the market here, I can confirm that the market is closed due to the daily break, and our market will open on March 1st from 11:01 p.m. those trading hours. Remember, the time that we use for trading is purely the New York time. I always keep reminding people we use the New York time, and we will be trading at 11:00 p.m. That's tomorrow, okay? The market will be open tomorrow on March, but that is the beauty. So when you come here, we have our whole strategy, but of course we are doing the fundamentals. We're going to do a clean trading. You could check out this, the enroll part of it for those of you who tried enrolling to the courses. Just note one thing that there are some features here that are in the development, but for now, you can come to contact, send us a quick email, and we will add you to our community group. For those of you who are there, please enjoy the live trading. There are frequently asked questions here. Do I need a trading experience to start? The answer is not at all. Our Forex fundamental courses is designed for absolute beginners with zero experience. And how do I access course resources? For the course resources, the module is being worked on. Of course, it's a whole complete system that will give you access to all the courses, the course materials. Do we offer refund once you pay? Yes, we offer refund. And of course, within the 7-day money back guarantee on all courses. Once you've already satisfied, you will be able to get. Can I pay in installment? Yes, we offer installment payment plans for our premium courses and mentorship program. And what is the mentorship program like? Our Elite mentorship program includes a weekly one-on-one call, live trading. Of course, today we are doing mainly trading analysis live, and of course, we would have that personal experience. Please be sure to check out our legal privacy, terms of service, risk disclaimer, and then refund. Please remember that trading involves significant risk. Past performances is not indicative of future results. This is not a financial advice. We are just empowering traders worldwide with proven Forex strategy and good trading experts. Of course, we will also open up career opportunities for people to work with us. But just know that gold is the XAUUSD is the one which is the most traded. Gold dominates the market. And of course, gold is the most traded commodity in the Forex market. Please be sure to check out our website for more information on trading. And of course, we know very well that gold is very volatile. And of course, it's a very safe asset to have. Let's get back to our strategies here. Now, how I caught this clean gold buys? So this is going to be our trading interpretation for this particular trade. We are going to look at this gold versus dollar. Right now, the market is closed. The only open market is Ethereum and Bitcoin. Those are the only open market. But of course, I only take one trade, and that is gold. And I do a 5-minute time for analysis. But of course, since we are doing analysis, we are going to use a 10 minutes analysis. Okay? So we will use the 10 minutes to do the analysis. But for now, let's bring it down to 5 minutes since we already structured that, okay? All right, so that's what we will be looking at today. Let's give it in 10 minutes analysis for easy analysis for people to look at it and then talk about all these experiences when trading in our market. All right, guys, let's get back to our understanding. We are doing trading. There's no indicator, no guessing, just structure. And of course, we are going to look at the chart. Please remember that the structure requires patience and execution. And of course, before you dive into entering the market, you should have analyzed the market, and we're going to look at our market context. And that would be the great thing. So if you are someone who struggles with over trading, entering too early, or getting stopped out constantly. Of course, when you set your stop loss, you can be stopped out constantly. Yeah. Then this is the right place for you. So if you're someone who struggle with over trading, entering too early, or getting stopped out constantly, this is going to be the breakdown to change how you will look at pullbacks. And let's get into it. Let's get into it. All right, so we're going to look at the step-by-step trading. Just like I mentioned before, we're going to follow this step-by-step breakdown. No guessing, just structures. No indicators, no guessing, no gambling. People always say Forex trade is gambling. And of course, if you do betting, betting is pure gambling, but here you need structure to trade and you need to understand. With betting, you can go and look at the odds and place your bet. But here, you need to understand the market before you dive into trading. So before we talk entries, we talk buyers. And of course, when we talk buyers, this is what I always say, that before we do anything, entries without buyers are gambling. If you have entries without buyers, those are just gambling. So let's say we have our trade here and you just enter trade at this point here. Let's say this is a point you enter trade, okay? This would just be purely gambling because you just enter trade with no structure. So we are trading a 5 minutes trade. And of course, I already explained that to you. That's why we have all these clean charts for you. Okay. All these clean charts are here for you, for us to have a look at it and see. Right now the market is closed, but if you look at this trade very well with the structure, you realize that most of these trades were just an upward trend, a bearish movement. So first thing first, I am looking at this chart, and this chart, it's going to help us understand uh, where we have the higher highs and higher lows. So this is the higher highs, if you can see these points here. This is higher high. And then also there's a higher high here. Okay. Okay. And also that point there. So those are the points of higher high. We will also have this deleted. Have this deleted. Just this, there's like a text here which is blocking. Okay. All right, so that text is already gone. That's the cool thing with it. Now we're going to look at one thing, especially first thing I am looking at higher highs, these high points, okay? Those are higher highs. And then also there's higher low points. And now one thing that I want you to understand clearly is that, yes, we see a strong bullish impulse, the move that is pushing the price upwards aggressively. These moves here are pushing the higher highs, higher low, but these impulses are pushing the price upwards aggressively. And of course, it tells me one thing, that the buyers, if you buy, you are in control of the trade. So the buyers are in control of the trade. So it eliminates sales from my brain. If I'm to buy, do I have to buy? No. The buyers are in control right from this point here. You could look at it from here. We had higher high right from here. This was a point where the market was really, really very difficult to analyze. And I told people to wait to buy. So when it started making the higher highs, okay, the higher highs throughout the market, it was easier for me now to remove the selling from my mind. So it is important when analyzing this kind of chart, we look at one thing. Most traders try to sell into strong, which is basically unprofessional, because professionals wait for a pullback in a strong trend. So many people would try to sell here, but you don't sell in an upward bearish movement. So many traders would really wait there. And this gives us to one context, the market structure. Market moves very fast. This context of the market, we're going to talk about it before we look at most of the analysis. We've done this in the 5-minute trade, is that it's kind of like difficult for you to buy when the market is actually moving in the upward trends. So most retail traders try to sell. They try to sell. They try to sell. Like at this point, retailers were trying to sell to push the market to their side. But of course, the strength didn't work well in the sell. So for professionals would wait for a pullback, which is basically a strong pullback. Like this is a very strong pullback. Then they try to sell, but this strong pullback was pushed with an upward trend. So on my mind here, my mindset shifts. I only look at the opportunity. Since I'm going to only do buying, I am only looking at buying opportunities with this kind of an upward trend market, okay? I will not put anything right from this point. Yeah, I would only look at the mindset. But at this point here, where they close the market, then probably I would now start looking at the sell position, because you can make money by selling, you can make money by buying. So it's a very strong mindset that we have to follow, and this only shifts. Okay. So one thing that you need to know is that, let's try to zoom this a little bit out, and also see. So when we zoom this out, we can clearly see that the market is actually moving high. So there's a continuation, of course, from this notice. We notice clearly that there is a very strong pullback before the high continuation. And this is what we call a strong pullback with this long candlestick. So that's the behavior, and that's how the trends behave. And in a trending market, the safest trade is trading with the trends. You only trade with the trends. So if the trends are basically like from this point, it's going up, it's going up, it's going up, it's going up. So you only trade with the trend. You don't trade outside the trend. So let's look at one cool concept here. The pullback and the Fibonacci. The Fibonacci is actually one of a very good strategy in Forex that we use. And now, what is pullbacks and what is Fibonacci? So is this a pullback or a Fibonacci or a reversal? And what do we see? So what do we see clearly here in our chart? So I'm going to analyze for you this clearly based on what we are looking at in our chart. Now, we wait, and then this is where most traders fail. But of course, after the impulse move, the price begins to retrace. This is where emotional traders panic. So when you see the price beginning to retrace here, most traders start panicking, because you've already bought your gold, and now you see the price is retracing. It looks like you're losing money. And of course, it keeps changing. So if we look at our closed logs, I don't know whether we'll be able to see. Yeah. So you look at this, there's some would come to negative. At some point, I close in negative. Some points I close in profit. And that is exactly what really happens when you get to panic. But with a professional trading strategy that you get from Rico Academy, you really have to look at that pullback. So Is it a reversal? Is it a pullback? Yeah, we have done all these drawings. So from our drawing, I drew a Fibonacci from the swings of the law. Okay, these swings of the law from this law. Then I'm able to also draw it from the swing. The swings are this downward parts, okay? Like these are the swings of the law, this and that. Those swings of the law are the one that helps me to see clearly. But of course, emotional traders always panic whenever they see this kind of swing. It comes below. If you bought from here, it goes below. So you're not sure whether it's going to go up or it's going to go down. But let me just make it so clear for you. For those of you who are here, please like and subscribe. Let me make it clear here is that once the market starts behaving like that, this is because in trading market, prices often retraces into like 0.5 or 0.7, basing on how the trade is continuing. So the market also sometimes keeps retracing. So, and what do we see? So prices pulls into 0.5. There are those trade zones that the prices keep coming and goes back. And of course, we always say it in a simple language that once it retracts or retraces down, there's that point, like this point, where it would always respect and goes into the direction of buy, and it can also retrace and goes into the direction of sell. So this is what I call kind of like institutional discount areas. So professional traders will always ask questions. Is this a pullback? Is this a reversal? This is the most important thing. Is this a pullback? Is this, or is this a reversal? And of course, from what we see in our trade, this is clearly not a clear, you look at it, is this a pullback? Is this a reversal? Is this a pullback? Is this a reversal? Before even you enter the trade. Yeah. So you need to be very keen and look at the direction, avoid panic. So this is where you get a little bit panic, where the market comes in this swing up to that point, and you see like you're losing money. But you know one thing, even in our YouTube channels here, we have it clear that for us to do trading, we have all this live coming um, schedules here, which starts on March 1st. We will talk about most of these things when we are doing trade. You don't need to panic. Please, if you haven't subscribed, please go ahead and subscribe to our channel and then hit the notification. So we have all this. We're going to do trading. And of course, we trade in the New York time, and that is the 9 a.m. or 9:30. We trade for about 2 hours, take our profit. If you're not satisfied, you can come back and trade later in the evening. Yeah, but of course, that's what we do. So this is what I can call a smart money reload positions, when you know the price, at what point do I enter. But of course, you don't enter blindly. Let's say you have entered from here and then the price comes down, then start going up. Yeah, but of course, you study all the charts, okay? This trade was a little bit difficult from that point, and then from all these other points. But we are only analyzing the trades that from 26, that was a day before 27th Friday, that was a Thursday trade. So we're only analyzing this trade going up. So this is the trade that we are only able to analyze. So we can see it's clearly an upward trend, which was quite easier for us to look at it. Yeah. All right. So one thing that I always want to tell people is that you need to, even if you have this amateur behavior of entering the market, please always wait for a confirmation. When you're trading in gold, gold is volatile. So wait for a confirmation strategy before you hit the market. Now we're going to do something a little bit nice about confirmation. What is confirmation? Confirmation, confirmation shift, confirmation shift. This is the talk. Before we do anything, guys, so confirmation shifts are really, really very important when trading. What is that confirmation? Eh? People always say confirmation signals. Yeah. But of course, in the Fibonacci zone, uh, here, it's where we wait for this. Like here, we had a very good confirmation. Once it was a bearish movement, the market was against us. Then we had this confirmation what that it was. We had this. You see, this candlestick was above this uh, sell confirmation. So once it came up and then this one went high, definitely if you bought from this point, it was still going to go up. But of course, from here, it was going to create a little bit of panic, and of course, that's why you would have to be patient, create panic then, and then it goes up. So most buyers who are scalpers at this point, once it hits, like maybe they take profit from here, they get out of the market. They just don't want to even to hold on to the trade, like swing traders. So that's something that is quite different in Forex. Guys, like the video and subscribe. Let's hit subscribe so that we hit 40K. We are almost in 40K. And of course, we're doing this live sessions with you, which is a very good one because no any channel will be giving you live streams throughout the week. And that's the most important thing. So confirmations. Now, let's watch carefully. Inside this, we have a Fib zone here. Fib is basically a Fibonacci zone where we have the starting price. If you look here, our starting price could be like because once you hover here, it is here. The starting price, if you can able to see, I don't know, there's a plus sign at the extreme. It's 5223. So that could be like our starting price. But of course, inside the Fib zone, the price starts forming higher lows. So it's going higher lows, like high, low, okay? So that is when you start seeing the there's the that there is like I would say the rejection point. You start seeing the wick here start getting rejected. Like here goes up, this wick is rejected, and price start losing the momentum. We see momentum slowing down. So when you see the momentum, instead of going up, comes down, and then momentum starts slowing down like this, definitely we are going to get a confirmation shift. So, and that shift is this point where the prices shift and goes upward or downwards. So most buyers step in when they start seeing this confirmation. Okay, the momentum is slowing down. Once the momentum is slowing down, because these are strategies you can't get many people. Now, when you start seeing this momentum slowing down, guys, just wait for that confirmation that price at any one point, you start drawing. Okay, this is how you interpret it. Let me show you how you could. You look at it, it came down. No, it went up, down, but it's not too high. It's not higher high, just higher low. And then it kept on coming down and just like that. So in that way, you can clearly see that I'll give you the trick. Before I'll give you the trick how I normally do my trades. And of course, you can keep always flipping these accounts. And of course, guys, whatever you see the chart here in the demo account is the same chart in the real account. Yeah. So how do you identify uh, what do you call fake traders from professional traders? Yeah. Most fake traders, they trade using, uh, they actually, the kind of money they put, it's not what they have on their account. But we'll trade with small money that we can. The starting is $500, but we can try to flip $30 to $100, $100 to $1,000. Yeah, but of course we'll talk about other things as we go along. So if you start seeing these rejection points, it comes, the price wants to go, there's being rejected, comes down. So that is the point where when we see those rejection wicks, it means that buyers are stepping in. So like here, it comes down, there's a wick here, buyers stepped in a bit, then there also people start selling. Of course, the traders start selling, and then of course, sometimes it's very important that this happens so that the price can break the minor structure to the upside. So it is important when these traders or buyers start selling so that the price can break to go to the upside. And of course, the confirmation only happens if one, this is not the Fibonacci, and there's no hope and there's no emotions. And then suddenly you see the market starts shifting, going up. So when you start seeing the market shifting, going up above the discounted zone, there are those zones that the market will always respect. So that means the probability of shifts, it's going to be heavily in your favor when you make entry. So let's say you made your entry here when you looked at this candlestick. And of course, you can't interpret all the candlesticks to do trade. All you need to do is look at the higher high. At that point where the market breaks and there's a rejection and it goes down and goes up. It came here, it came up once, twice, okay? And then it went up at this point. When it reaches this breakthrough, when this was able to cross here, it went up from this point, okay? So that is the point that gives you the most favor to start thinking there's going to be a structure shift. And of course, one shift from a bullish side of the discount, it gives you the probability in your favor that now there is a point where you have to look for entry. So you can see from here, once it hits this kind of uptrends, now there's an entry point here that you can take to enter the market. Before you enter the market, let's look at the entry logic. The entry logic is the most important thing that we have to talk about right now in our trade. So for you to do trading, there's that entry logic. Entry logic is basically, let's have two options. We have option A and B. Option A, break the breaks and the retest of a structure that was just broken so that we can make the entry, and then also break and retest of a structure that was just broken. So that is what you need to look at it in your entry logic. Then two, a strong bullish candle that closes above a minor. That is also the most important thing that can help you do trading. Guys, like the video, subscribe. So when you have that strong bullish candle that closes above a higher minor, it gives you that entry point. So let's look at this in our chart. So in our chart here, we need to look at my ideal entry logic. So my ideal entry logic is that each and every time we are going to do trading, we need to look at the first option, a break and a retest of the structure that was just broken. And then option B, a strong bullish candle that closed above. So where is that strong bullish candle that closes above? This was the strong bullish candle that closes, okay? Then option A, this the end. Actually, you need to master this. This is the part that you need to master before you enter. So when you have this this candle here that closes, it closes here above. This was the retest point. There was a retest here, a retest here. That closes. It has gone beyond. I can draw that for you. Okay. All right. So it came here. It came up once. twice and it went above. So from this point here, at the price of 552.37, you would actually enter the market because it has closed above. This is a means close above. So if I enter from here, I can hold on to the trade for like 10 or 15 minutes and then take my profit. But of course, you don't need to panic when you start seeing it with this kind of the bearish movement. So there's no need for you to panic or stop and then stop the loss and then move on. You have to be a little bit patient. So once this happens, once you see this strong bearish bullish move, bullish is upward trend, then you can make the entry. Then the stop loss. So you set your stop loss below, like you set the stop loss below here, so that when it comes below, it just closes, so that you doesn't you take a lot of uh losses. And of course, you need to know, I've been trading using a lot size of 0.08 for most of my trading because of the capital. And with a lot size of 0.08, you cannot take more than 5 trades if you have $500 on your account. So that's why you need sometimes to have 1,000 and you're ready to risk. That is when you will be able to reach out to us and we do this trade together. Okay, so that is the most important thing when we look at option A, which is basically a break and a retest of the structure that was just broken. So the break and a retest of a structure that was just broken is the most key thing that we look at when we are doing our trade. So let's look at now option B. But of course, let's first talk about it. So option B, strong bullish candle that closes above a minor. So we've seen that in our trade here, there's a strong bullish candle that closes above this minor here. This is a minor, so this closes above. So in that way, we know that there is a swing into the Fibonacci zone. And why? Because the price, if price breaks that low, my idea is now invalid. If price break below this, if let's say if it came here and it started now going down against, so if price breaks above that and start going low, that means my idea was invalid. And of course, for a professional trader, when the price comes down, you first pause the trade. Okay, you pause a bit. Why? Because that would be you pause so that you do a little bit of risk management. Of course, not emotion. So let's say like I told you to enter from this point and then the price breaks down and start going against my direction. Okay? It gives us to one important thing that we are going to talk about right now. Risk management. I hope you have enjoyed so far our sessions here on trading. Now, risk. Every business has profits and risk. You start a business with the hopes that you will take profit. But if you don't take profit, don't say Forex is a scam. People who trade in Forex, when they take profit, they say it's successful. When they take losses, Forex is a scam. Same as betting. Betting is also a scam. When you put your odds and you don't win, you say betting is a scam. So Forex, for you to become a profitable trader, okay, a profitable Forex trader, you need to understand the risk that comes. If like here, my account, if you look at my account standing is 627. We are using our demo. There's no prime using the demo. Okay. So what happens here is that if I'm to risk, I'm giving you all my risk strategy based on how much money I have here on that account. the dollar is about 6.27. So if I risk 1% per trade. Okay, so 1% means I'm risking about $6 per trade. That's one thing that you should know. So since I'm risking $6 per trade, I need to understand that you trade what you want to lose. If I'm going to risk my 1% of trade, if I'm going to lose $6, what's going to be my strategy? Is that I need to calculate my lot size and then also my stop destination. So one thing that I can tell you, when you're doing trade and you're risking, you need to get it clear and have this so that you follow. You need to calculate. You need to calculate, of course, and you need to calculate your lot size. I don't know if I could get this out. Google how to calculate the lot size. Now, to calculate lot size, there are formulas that are being used here for you to get the calculations right. To calculate your lot size by dividing the cash amount you are risking, that's why we call it trade is a risk, that you are risking on your account times the risk percent. Of course, we say that you have to risk like 1% of your trade. So the core formula here is that the lot size should be your account balance times the risk percent, the stop loss in pips, which is the stop loss in percentage in points times points value. That is how you calculate. So you determine your account balance. Our account balance is 627. So you can see, we can also double check our account balance right here in the trade. So in that way, then we also need to define our risk percentage, which I've actually mentioned clearly here that I risk 1% per trade. That is always on the good scenario when you're risking. Then also to avoid gambling, that's why I separate traders from people who do Forex. Traders are basically people who are smart. They have, of course, you must be smart enough to make money on Forex. That's why some people say Forex is not for the weak. Then I also get back here and then look at my stop loss. Okay, stop loss is basically like what is that point that drops below the points in percentage that I need. If it drops below certain points, I need to take my loss and close the trade. Then, but of course, stop loss of 40 pips is quite good. I see here you can use 50 pips, but with my account of that, I will use 30 pips. Then also you need to determine the pip value for a lot, like one is actually usually about $10. So that's kind of like, if you're losing $10, that's a lot, okay? But $10 on 1,000, you can get that money. Then you do a calculation here. So if you've not gone to school, just like we said as a requirement when you come to our website here, that everybody can trade, okay? You can do a full trade. We have a very nice, we have about success of training 1,000 people plus, train people from South Africa, and we have 3 years experience in trading here. But of course, we want to be as true as possible. We have a lot of good testimonies that are coming out from people who join our trade. But one thing that I want to let you know, in our mentorship program, we talk about psychology, okay? And we break down most of these things. But I just wanted to push your mind a little bit here. There's something that I do mention here that what do you need in order to take trade? Okay, you need to look at For us, our core value is data. Actually, most of our trade here are being driven by data. First of all, I'm a very good data scientist, so I download always. When I come here, I download my, I try to download all my, I try to download all my trading history, and I get that Excel file is the one which I always analyze it before doing any trade. Yeah. So that's not a big issue, but of course you need to go to school to do trading. People go get master's PhD just to be very perfect. So, of course, now here the lot size is going to, you need to calculate the risk amount uh, times what you're ready to lose. Okay. And then also the total loss potential, like 50 pips times that, that's $500. So it would be the lot size of that. So you can, if you have 500, you could use a lot size of 0.2. But if you are a high risk taker, you make high, you get high profit. You take high profit. If you use a bigger lot size, the bigger the lot size, the more the profits you take. So you would try to do that. Yeah, we're not going to spend a lot of time talking about that. Let's get back to our chart analysis and talk about one key thing. If there are questions, please keep them in the chat. Let's keep the questions in the chat. Now, if there are no questions, let's proceed. So it is always your lot size that you must always watch. You must watch your lot. You must watch your lot size. Forgive my accent. You must always watch your lot size. You do not change stop loss to fit the lot size. No, you don't. And of course, if you have a small amount of money, please use a lot size of 0.01. So you can also change the lot size to fit the stop loss. That is what we call discipline. Every trader, whether you're a beginner, you're a professional trader, key thing is discipline. That's why even when you come to our channel, we keep referring to discipline, precisions, discipline, liquidity. We trade mostly liquidity. We do not trade candlesticks. Candlesticks are quite difficult to trade. And guys, please be sure to subscribe to our channel if you haven't. Next week, we have upcoming premieres that are, we have about 1, 2, 3. We do Monday to Friday. That's the beauty with Rico. Of course, need to have very good experiences in doing these trades. Okay. Now let's talk about one more thing before we enjoy this other part of the discipline part of a good trader. A good trader must always have one thing, apart from understanding the risk. If your stop loss is 40 pips, your lot size must match your risk percentage. Now let's go to the next one. The next one is trade management. Trade management is after you have entered the market and price starts moving up in your price start moving in your direction. Do you either close too early out of fear or you hold on with no plan? Of course, the most important thing, actually, I've seen this even when I was a beginner in trading. When I started trading, I used to fear a lot. When I start making money, I would close. So I can show you here in my chart history. Okay. So you see here, when I start making some small take-off profit, I close a little bit too early. When I try to all this is when my fear comes in. Oh, I'm losing all this much. Now you see, I lost all this much. The profits I've taken, they were small. That's why uh, it's not bad. We're raising this. We started actually this. For those of you who have been following us from the beginning, remember, we pushed this account right from $100. Now it's $627. In about 1 week, yeah, this week here, that has just ended of February, the last week of February. That's when we actually close with. We should have actually been in. At some point we hit 8,000. We are close to 1,000, but because we needed something like trade management, look at how whether we either stay or we hold onto the trade with no plan. Of course, holding onto the trade with no plan is very dangerous. You may end up risking and losing money. So guys, we will keep doing this, but I know by the time we keep moving, our streams are going to be very, very good and they're going to be very professional. So, but trust me, everything we do here, we do it professionally and we do a lot of research. We talk about things we know and we just don't talk about things that we don't know. So after entry, price starts moving up. So, but this is where most traders sabotage themselves. You are trading and the price starts moving up. When you enter here, price start moving. Then it start coming down. Then you start having that fear. You close at some point when you're even here. You see this week is too down and you close. Feel like, oh, I've already made. So you need to hold on to the trade. Be a swing trader. Don't be a scalper. A scalper is the one that waits for that opportunity and sees the profit he has made. Just like here, I've made all this profit, 73, 52. I close all that. That is it. I close all that and I count how much I've made, withdraw it. And of course, people say there are some issues with withdrawals from certain brokers. Some people are using HFM, others are using XNES, but of course, XNES is proven to be the best broker. I've actually gotten my refunds on XNES. I've also done uh, withdrawals on other accounts. There are those funded accounts. But of course, people ask questions. Can I give you my money and then you trade, then you give me the profit? That's a cool one. If you're giving me your money, we need to look at the percentage because the broker takes 20%, you take 80%. Now, if I trade it on your account, we need to also decide, do I take the 10% or also I take the 20% or you take the 60% of the money that you have put. Let's say you have given me 500,000, 500 USD or 1,000 USD. Yeah, so we'll talk about that, but that is only done in the VIP class. Okay, have a funded account, we trade for you, you only wait. If I blow up the account, but of course, in most cases, I do not go to a point of blowing up accounts. I really do risk or trade management. That's why I'm talking about trade management. Once I enter the market and the price start moving up, I hold onto the trade, but with a plan of when to take my profit. So when do I take my profit? Let's say I've entered trade here and the price start moving. I get a little bit panic here. Then the price start coming. And remember here, it came up, came down, came up. It came actually up twice here. So this is the zone that I will always get started. Then it came down and then it came up. And this movement is higher high and higher low. Then came up, then went up to up. So and then if I made it clear that if I enter the trade, let's say from here, if I hit like five, I put up my, like you see me, I've been putting my, I don't enter trade without plans. I enter trade with plans. So I've always put my take profit that once I hit that percentage, I take my profit. That's why here you see it has been closing when it hits. So I just allow it to roll. The only thing that I don't put is my stop loss. Once I've done my proper analysis, I don't put a stop loss. I only put a good take profit so that I know when to close my trade. Uh, of course, I close my trade with plans. So here's my management plan. When price breaks above higher high, when price breaks above higher high, like what I do is that I set up my take profit. And of course, in that move, I get my break even when I have some risk reward. I partially take my profit. And of course, at the same time, if it trails in higher low, and that happens, and then it continues expanding upwards aggressively. This is expanding upwards aggressively, moves very fast. So then I set up my take profit. That means the liquidity is being taken. Okay. So and in that way, this trend always makes me to know the continuation. When do I continue? Should I continue being patient? And really what happens? So if I've been patient enough with my trade, I've been holding on this trade for some good hours, or the beauty is that I can take my good profits. And this brings me to some most key things that I will talk about is the psychology of a trader, your mindset, the mental health of a trader. Most traders, psychology, the trade, this trade requires patience. And since trade requires patience, psychology kicks in. And what is psychology? So, of course, here are things that we need to know, that before you lose money, you need to be a little bit patient. You need, even if you don't have skills, you need to be patient. Once you are patient, then you also look for secret indicators, not only signals, and then your patience will just pay you off. So waiting for a pullback or waiting for a confirmation or trusting that at some point the market will play against or will play in your favor, that would be something that is also great. But also I can tell you clearly that executing with discipline is most important when you're doing trade. So it is important to always take your time before you make bad strategy. Uh, most traders lose not because of their bad strategy, or they lose because they cannot wait. When you cannot wait, you lose. And once you lose when you cannot wait, and that's what really happens. So if you can't wait on the trade, you entered here, you get out, you enter, you get out. Of course, that's being a scalper. I don't blame you because you might be right that the price will go down. Let's say you have entered and you came here and then you close. The moment you take your profit at this point, I always tell people, the moment you enter here and take your profit at this point, you must wait for the price to break above that point when you've taken your profit. So it has broken here once, then it came here twice. Then at this point you can enter, and once you've entered, and then you've put your take profit from around here, okay, here, then you have to wait for the market to reach that up part, that zone, and then you join again. Because if you take your profit from here, you have to wait for it to be above, like this point here, then you enter. But of course, if I take my profit from here and I look at the trade like this, at this point, and it's coming, let's say and it's coming to like 5 p.m., I will not. So if the price fails and it starts going significantly down and it starts coming below, let's say you've seen it went up to this point and then it started coming down, like I'm very sure the trade that is beginning on Monday is going to first start. Too bad it will start by actually going into the bearish direction. So you see, you wait, it goes up. If it goes up a bit, that means up to this point, you can, if you take your profit at this point, that would be cool enough. But now from here, this trade, the market was closed when it was taking what? There was indicated that it will come down. And it is very possible if you zoom it all the way, Uh, mm, if you zoom it all the way and you see this market has been going up, so it might be very difficult for it up here. So it's going to first continue staying up for quite some time. And in most cases, it keeps going up. So you see, these are for the past days. It has always been going up. So buying is the best option to do trading. Now you see, if you had this opportunity, entered from here. Okay, I entered after this strong bearish movement, and you entered around here, and it started going up in your favor at this point. So there, you'd always analyze the market. Well, it goes up. So this is the point where most people really crash. You have to wait for, so you have to wait for this long uh, bearish move before the market starts becoming stable again. And then you get that point when it will go up. So like here, it was quite very good for me. I did a lot of good analysis and took my profit. Yeah, so that's one thing that you also consider. You need to look at this chart. And of course, you can extract the Excel data and then run the data using the agentic AI tools. Then it would also give you a good prediction. So let's now look at our final strategy. And of course, in our final strategy, after taking the trade, you have the psychology, not the skills, not the secrets, not the indicators, but you are able to be patient, and then you wait for the pullbacks, wait for the confirmation, trust your structure, and then execute with discipline. Discipline is key for any trader who is trading in Forex. So most traders lose not because of their strategy, but they lose because they cannot wait. When you cannot wait, you lose. So let's have something quite interesting here. Is our final lesson for our today's stream. Guys, don't forget to like the video, subscribe, and leave a comment and let us know what we should talk about in our next big live stream that is coming on 2nd. And please, if you haven't, please visit our website. We have our website for Rico Forex Academy. Most of the packages that we are giving you here, if you come to courses, we are giving you the fundamentals, the Forex fundamentals for beginners. Most of these skills with very good indicators that I really prefer are even in the Elite mentorship, where we have the premium, everything in Gold Strategy Pro, the weekly coaching with calls, the live streaming. We take all that and do it for the people who do the premium courses. People say that, okay, if you make all that money, like we claim as traders, then why sell courses? Why do you go to school if you can make money? You go to school to get knowledge. Forex is education. That's why I made it clear here. It is education, because you need to educate yourself. You need to understand uh, the formulas to calculate your lot size. What is that formula? You need to have this bit of calculations. And most people are not good at maths. And it's okay, we understand you're not good at math, but also you can learn some strategies, the entry point and the exit point. So I don't blame you, but let's look at our final lessons here. First, don't be biased that every trading you're going to make loss. If you say that every trading you're going to take, you'll always be making losses or you'll be losing money, then please don't go for Forex. You don't need to be biased. Two, uh, pullbacks pullback is the second thing that you need to look at it. Look at pullbacks. Then the third thing is that wait for confirmations. And then also deal with proper risk management. Always know how to risk and when. And let's wait for winners to breathe. And of course, trading is not about predicting. If you come to trading with the mindset of only predicting, you will lose. And then on the other hand, what you need to know is that it's about reacting with discipline. You react, be smart enough to enter the market, and then you win. So one thing I will tell you is that when you trade with discipline, you react with discipline. Most of the profitable traders uh, is that you will always find yourself breaking down and become more helpful. And of course, please don't forget, if you've benefited, if you found this breakdown helpful for you, please drop a comment and let's structure our emotions. And if you want more breakdowns like this, please be sure to subscribe. Go to our website. We have our website here. It's just rico.org, which gives you, it's a Forex Academy. Right now, we're doing a lot of training online. We're building up our school with at least 20. We're going to start with 10 computers in one lab. So yeah, we're going to start with 10 computers in one lab that will train you in our permanent location where we have our land and we're going to have a good building. We already obtained land, so we will put up a building for our Forex Academy to have a permanent home. And that is coming soon, yeah, with our trading strategy. So master the art of gold trading. And of course, we have trained over 1,000 students plus. Our success rates, a lot of our students some have made profits, some are very profitable people. And of course, these are our trading course path. And of course, we have some bit of testimonies. And please, we are working on the enrollment part on this, so that we are working on the application so that you enroll, but you can get enough information that you need from this website. And of course, before we see you on to the next one, please be sure to stay informed. And of course, staying informed means you can go to our website for more information. And of course, for the website, you just come here, Rico. It's the only cool website. I think it's one of the best. We designed this not with any other of our, we didn't design it with, we designed it on React application. So it's purely JavaScript, Tailwind CSS. And the cool thing is that I do the dev myself. So it's cool. We're now waiting for our permanent home coming up. So trading involves significant risk. Past performance is not an indicative of future results, and this is not a technical advice. And of course, one thing that you should always understand is that at our Rico here, if you join, we will always take privacy as key, the information that we pick up here. And of course, don't forget one thing, that for all what you've been learning today, our disclaimer is that trading, of course, Forex trading or trading in commodities carries high level of risk and may not be suitable to all or for all investors. But of course, there's that degree where you can leverage and also make some profit out of it. For most of the thing, this is not a financial advice. All whatever you see here are educational and informational best purposes only. So do not judge us, and we stay harmless. You can use our strategy. And guys, like the video, subscribe. See you on the next one. Leave a comment and let's know what you think about.